Guys, I profited huge in 2008 and 2009 recession in both stocks and real estate, and this is my plan to make even more money in the next recession and crash. Guys, when times get tough, the narrative is going to change, and the narrative is going to be so bad, you need to make sure you keep this video and rewatch it when the times inevitably get tough. Now, you can have bear markets during good times, and you can have bull markets during bad times. But look at the last 25 years. This was a recession. The tech boom happened. We had a recession starting in 2001. Markets went down 45%. This is the great financial crisis. From peak to bottom, 60%. This is COVID. Peak to bottom, 40% drop. And this COVID crash happened in 1 month. Now, why do recessions tend to lead to bear markets? Well, leading up to a recession, things are good, things are great, people feel good, unemployment's low, I have money, stocks are going up, let me put more money in there. Those things are great. When a recession hits, a lot of profit starts to fall. And then people have more fear. Selling happens and it continues to go. That's why we tend to see bear markets when recessions occur. Recessions are inevitable. It's going to happen. You have a big run up in an economy and then you have a pullback. The good thing about recessions is it's a great time for great businesses. Recessions get rid of the crap. Think about wherever you work. There are the crappy businesses you can think about who your competition. They're probably the younger ones. Recessions can help wipe them out because a good company like yours, wherever you work at or if you own, if it's run well, will withstand a recession. If it has a good balance sheet, it'll withstand a recession. And that's why during recessions, stock markets tend to do poorly because all the crap companies go away, but the selling causes more and more selling and fear and anxiety, and that's what happens. So what's my plan during recessions? Well, I've always tell the story. Back during the great financial crisis, I have absolute proof. My guys at Bank of America and US Trust used to love calling me on the phone because I was the only good phone call they got. I loved buying stocks. That's the mentality I want you to have. I want you to look forward to it. My plan, I'm already buying stocks now. My plan is to buy more of them as companies fall and stocks fall. But I want you to remember, the companies I own, the numbers will probably not be as good during a recession because business in general doesn't do as well. There'll be a few companies that do very well. For example, a bankruptcy law firm, they're going to do very well during a recession. Bankruptcies go up, they have more business. But retailers, especially maybe like more niche ones, probably going to have a hard time. Boats, for example, RVs, those don't do as well. Those are luxury goods that people can postpone. Luxury, high-cost goods. But for the companies that are good, like Target, Walmart, all these companies. Actually, Walmart might do very well during a recession because people have to go save more money. That's why you saw Walmart's same-store sales up recently and Target's were down. Target's kind of the higher-end version of Walmart. People probably went and said, let's go to Walmart instead and save a few bucks. But my plan is to buy the companies that I own, the 18 companies I own. I want to buy more of them. And there's a list of 15 other companies that I'd like to own, and hopefully their price falls where it makes a lot of sense. But don't think for a second that I think my companies are going to go up from here. They're not. They're not going to go up. What I do know is if I buy them at the right price and I hold on to them, when the recession finally ends and the economy kicks back on, these companies are going to spring up and they're going to do great. And that's my goal, to dollar cost average into the individual companies that I own. And your goal should be to dollar cost average into ETFs. Because unless you're planning retirement imminently, the future is your friend. Time is your friend when you're investing. Keep putting that money into those ETFs. I don't care how fearful it gets, because guys, guess what? If the world ends, the money's not going to matter. So you may as well be investing it. That's the whole goal. Invest during a bear market, because if you truly, truly believe that the world's going to end, who the hell cares? Your money ain't going to matter anyhow. So you might as well put it towards cheap stocks, because guess what? Go back here. Go back. If I told you right now one of the best times to buy stocks, you'd go here, 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 and here, wouldn't you? But during those times, that's when fear was the biggest. That's when people were scared. That's the point. And guess what? There'll be another recession that's caused that gets people to go, yeah, but this time it's different. Guys, this was COVID. We didn't even know when the world was going to open up again. We didn't know how many people were going to die from this disease. We didn't know anything. And guess what? After a month, it was done. Back up we went. Are there reasons for that? Of course. That's the point. The peak of the market before the great financial crisis was around October 1st, October 5th of 2007. If you'd bought the S&P 500, the total return to today would be 405%. Now, that's 5x your money. That's not 4x, it's 5x your money, which is awesome. Okay, now, what if you've invested all along the way and the bottom of the market on March 9th, 2009, how would you have done? Instead of 405%, 1,000%. 1,000%. That's 11x your money. It's just math, guys. That's a huge, huge difference. This is what I want you to remember out of this video when things are scary. When you're in our community, I want you to remember the fact that when times are scariest, that's when you make the most money. That's 100% fact all the time. If a stock is wonderful at 100, it should be even more wonderful at 50. That's not what usually happens because news comes in, fear comes in, stomach comes in. I always tell the story about the couple I helped back in 2005, 2006 through retirement. I said to them, guys, if stocks fell in half, what would you do? And the wife looked at me kind of confused and said, well, we'd buy more, right? I said, absolutely. These people get it. And the great financial crisis happened. And I frantically get an email early 2009. Paul, I'm so scared. Stocks are going to zero. What are you doing? Well, I'm buying more. Isn't that what we discussed? You're actually buying more? Yes, that's what we discussed. No, I just think it's different. Banks aren't going to be around and we're going to have the government's going to zero. They bailed. Now, they looked smart for a while because that was early 2009 and stocks continued to go down for a month or two. But then how long before she got over that fear? I guarantee she missed out on a lot of gains as it was rebounding. And that's the point. We don't know when the rebound is going to happen. But I do know that even if you got 400% and you bought all the way down and you made 1,000%, your average was what? 700%. That's my point. Even dollar cost averaging, you still 8x your money. And that's what's very important for you to remember. And these are the conversations we have in our community. The community of people who are like-minded, who sit there and think to themselves, okay, what's really going on out here? Now, guys, you've noticed that we have limited daily spots for this community in software. And the reason for that is because the software as it exists today includes everything, all of these tools that we have to offer that help make better decisions for stocks, retirement, and real estate. Now, behind the scenes, we're making some changes. So in the near future, the current offer is going away. As we've been getting feedback from our community members, people have expressed to us that they want us to focus on specific aspects of the Everything Money tools that apply to them at that current moment in time. And they don't want too many options. They don't want us to be the cheesecake factory of software. And if you've been watching our channel for a while, you remember that I built the software selfishly for myself, that I could use it to constantly make the right decisions for stocks, real estate, and retirement. But the channel has been amazingly successful and it's grown so much, so it's becoming less about me and more about how I can better serve you and the community members. So the good news is we have not made those changes yet. So if you join today, you'll be grandfathered in for life with all of these tools. And this is the best offer we've offered to date. And I'm telling you this now because there's still time for you to sign up as long as you join the EM community today before we make the changes. You'll be able to keep all these tools even after we make those changes. These tools are yours for life. So in the description below, click the link to get access to our software. It'll be the best decision you've made all year. So like I said, back in 08 and 09, this was scary times, guys. People thought, are we going to have banks anymore? Am I going to have access to money? Things were so scary. And I hate to say it, but I was loving it. And I want you to love it. I want you to have that mentality. I want you to be dancing when stocks are down. A day like today, when the NASDAQ is down over 2.5%, I want you dancing. I want you to sit there and say, great companies at great prices. Guess what? You're never going to buy at the bottom. You only buy at the bottom when you dollar cost average. You're never going to be able to pick a stock and go, I'm buying it today, and it's not going to go, it will go down. It's impossible to pick the bottom. But if you find a good company at a good price, if the stock is falling, you need to go buy more of that as long as the fundamentals are relatively the same. Peter Lynch always says, everybody has the brain power to buy stocks. Not everybody has the stomach. Now with YouTube, now with this channel, you can retrain your stomach if you think you're going to be fearful. And if you're not going to be fearful, all the more reason to get involved with us. because it'll be a great time to buy because bull markets don't last forever. And this one's been going on for a long time and we have a lot of overvaluation, but during recessions is the opportunity of the lifetime that you need to be able to jump on. Because guess what? Going back 250 years of this country, every time there's a recession, what ends up happening? Better times are ahead. Don't forget that. So if you want to see the 33 companies that I want to own and why, watch this next video. Thank you very much for your time.